Hello and welcome back for another edition of London Direct. The UK GDP number has come in worse than expected, and that's extra significant as we're coming towards the end of an election cycle. To pick the bones out of these numbers, I've been speaking to Erlam from Oanda. So Craig, can you pick out the highlights and lowlights from this GDP release?
Well, I think the biggest low light's going to be the fact that it missed clearly by significantly from what we were expecting, down from 0.6%. We were expecting 0.5%. Instead, we got 0.3%. That headline figure is not going to be good reading for any Tory voters. It's certainly not going to be a good reading for the coalition government, from Conservative standpoint or Lib Dems for that matter. When we delve into the data, we see that production fell by 0.1% or contributed minus 0.1% to that GDP reading, dragged down by the mining sector as well, which suggests that commodity prices really are playing a big part in this. I think when we look at the services reading, again down to contributed 0.41% to that GDP reading, down from 0.9. Again, a bit more negativity here, and I think, to be honest, I think the biggest worry really from my standpoint is how big a contribution that services reading did make to that GDP figure. 78.4% of the UK economy right now is being driven by the services industry, and that suggests to me there's a big unbalancing in the UK right now. If we see a slight slowdown in the services sector like we saw over the first quarter of this year, that really has a big negative impact on the GDP reading. When we look at the positive side, on the other hand, I don't know what really people have to moan about. It's 2.4% growth year on year. Yes, this 0.3 reading missed expectations. Yes, it's lower than we've seen quarters throughout last year, but it's still 2.4% growth. It's still faster growth than we've got in the US. Still faster growth than we've got in the Euro area. This is a strong GDP figure despite missing expectations, and I think we've got to be grateful that we are seeing strong growth at a time when so many other countries are actually seeing poor growth figures and even recessions and high levels of unemployment.
That services sector is really interesting. All the politicians quickly pointed out that the low oil price was basically a tax cut for the whole country. But why aren't consumers going out there and spending?
Well, I think there's going to be a few reasons for this. I think firstly, yes, the winter months we do tend to potentially see, the first quarter of the year we tend to see less spending just because people are recovering from the Christmas period. I think also the mindset has now changed since before the financial crisis. Before the financial crisis, if you had a little bit of money in your pocket, you go out and spend it. If you've got a credit card, you'll go out and spend this money on the credit card. The mindset's changed since. There's a lot more fear in people now because what people have experienced over the last 6 years, not being able to afford rent, not being able to afford to pay their bills, having to move out of their homes. This can really scare people, and I think what we're effectively seeing now is throughout this recovery, people aren't necessarily as willing to spend those few extra pennies they've got in their pocket. People don't want to put money on a credit card anymore because they're scared of the repercussions if we do get another recession, and people just maybe don't feel as secure in their jobs as they did before in order to go out and spend this money. So I think we're probably seeing a little bit more deleveraging, paying off debts, but at the same time people putting money to one side for a rainy day. Now, I don't think this will necessarily continue. I do think the next couple of quarters we will see this more, a little bit more spending. People saving the money in the first quarter, spending a little bit extra in the second and third. We've got better weather now, and I think when people see these better weather, when people go out, the sun is shining, I think people are a little bit more happy to spend that money, especially if they've put it to one side for such an occurrence.
Yeah, we can't ignore in the middle, we're coming to the end of an election campaign. Do you think the average voter really cares about whether the UK economy grew by 0.3 or 0.6% in the first quarter of the year?
I guess it depends which newspaper you read. Some newspapers will try and put a positive slant on it. They will say this is still strong growth, 2.4% growth in the UK. It's something which should be envied, or other countries will envy, and it shows that we've got a strong economic recovery. A year and a half now we've seen these strong economic figures. It doesn't matter if the first quarter was a little bit slower. Or you could look at these the other papers and say we've still got unbalance in the economy. We've got these 0 hours contracts. The NHS is still under pressure. It really depends on what the voters care about, and the polls suggest that voters aren't necessarily concerned with this economic growth argument. David Cameron has gone on and on and on about the strong economic growth in the UK, highest levels of unemployment ever, low levels of unemployment, 5.6%. people haven't really latched onto that argument. Since the start of the election campaign to now, his poll ratings haven't improved, which suggests people aren't really concerned about this. The person whose polls have improved is Ed Miliband, because he's talking about this cost of living crisis. He's talking about the NHS. He's talking about these 0 hours contracts, which are the issues that people seem to really care about. And I think the reason they care about it is simply because it doesn't matter how high the levels of unemployment are, how low unemployment is. It doesn't matter how fast the rate of growth in the economy is. If you're not feeling the benefit of this, then these numbers are irrelevant. You think they're being fixed. You think they're wrong. You think they're being skewed to appear in favour of an economy which isn't actually performing as well as you think. So I think really it depends on the newspaper you read, but at the same time, the polls suggest right now that people just don't care about how the economy is performing and what kind of growth we're seeing.
Yeah, let's finish off with the sterling implications. We did see a sell-off in the sterling probably a few weeks ago now because of the election uncertainty. It's been ticking up since. How do you think it's going to act in the run-up to the big vote?
Well, the last couple of weeks we have seen a rally in the pound sterling. We are at an interesting level now. We've surpassed that 152 level against the dollar. I think a lot of the strength in sterling over the last couple of weeks is maybe being driven by the Bank of England and its slight change in stance, moving away from the fact that the next rate move could be a hike or a cut. They've said in the minutes of the last meeting that the next move will be a hike. So I think this is providing some support for sterling, especially after such a strong sell-off in the months leading up to that. Now we've got a week to go to the election. Usually ahead of these elections, this uncertainty can weigh on the currency and it can weigh on stocks, and I wouldn't be surprised to see this happen again. It's not just uncertainty about who's going to win the election. Labour and the Conservatives are deadlocked. This is the tightest election we've seen, some people are saying, in more than 100 years, but it's also the implications for who wins. A Labour government is going to do things very differently to a Conservative government. A Conservative government is offering an EU referendum which could have serious implications for business in the UK, but again, a Labour and SNP government is going to have very different outlook on things compared to a UKIP and a Conservative government, so for example. So it's not just the tightness in the actual polls that are going to have an impact, it's what the implications are going to be because of the different views on how the economy should be run, which is going to have an impact on the pound. Now, the thing that I find really interesting is when you look at the charts, the price action has just surpassed the 20-week, gone above the 20-week simple moving average for the first time since the middle of last year. The price action has just moved above the 100-day simple moving average, again, since the middle of last year. So you can say what we normally see ahead of these elections is uncertainty and weight on the pound, but all you have to do is look at the technicals to maybe suggest that people have become a little bit more bullish on the pound ahead of the election and maybe won't see all this uncertainty weighing on it as much as we would have previously thought.
Well, thank you to Craig for his take on things. Stay tuned to Duke's Copy TV for more interviews and analysis. But for the moment, from a very sunny London, goodbye.